Many investors are looking for a safe haven and a place to ride out the storm. Now, my next guest has some thoughts on that. Joining us now is Caterina Simonetti, a senior VP and private wealth advisor at Morgan Stanley. Caterina, you like the industrial sector, is that right?
Yes, we do. Industrials is certainly an interesting sector to watch. It is one of the few sectors that can actually benefit positively from this tariff regime. And as investors are desperately looking for safe haven amid the tariff news, the immigration enforcement dodge, this is one of the sectors that performed well throughout the year, where companies have positive cash flows, strong balance sheets. And what we're going to see as the tariffs are actually implemented is higher pricing power and more demand. And specifically within industrials, the HVAC, electrical equipment, and lighting companies stand out. And as the infrastructure build out continues in this country, this is regardless of tariffs, regardless of economic policy. This is absolutely one of the top sectors for us to focus on this.
Give us a couple names. What would you be buying here?
Well, while I cannot really comment on individual names, this is the factor that I'm going to share with you is that industrial companies are one of the few companies that actually showed positive earnings revisions this year. And this is not something that you can say about a lot of names in S&P.
You also like a couple of other areas, though. Utilities and energy, I read, are hot for you. Explain that.
Well, absolutely. We're playing defense. And as we're looking at this market, the game that we played last couple of years, focusing on the high-tech names, focusing on AI and the productivity, not that it's going away, but the leadership in the market is changing and the market participation is broadening. So in order to give investors that protective portfolio that is going to get them through this volatile market. And by the way, our base case for the market towards the year end is 6,500. But before we get there, we have to get through a lot of volatility. And that's where the names in energy, in infrastructure, in industrials, that's when that defensive positioning makes a lot of sense within portfolios.
So no specific names, but give us a hint, types of companies in utilities and energy that you might look at.
Type of companies that are competitively positioned, type of companies that will do in the variety of economic environments. When you're looking at the business models right now, the most important part to consider is how these companies are going to be affected by tariffs, and also whether there is a dividend yield component when you're buying the stock. Because for the portfolios right now, it's that quality, diversified portfolio that makes sense. And soon enough, there is going to be plenty of buying opportunities. We're already seeing them there. And as growth is coming down, we're going to be building up the growth exposure in our portfolios in time, but we're not quite there yet.
Caterina, good stuff. Thanks so much for being here today. Appreciate it.